So let's go ahead and switch this over to live for everyone viewing on YouTube. All right, what's going on YouTube? Hope you guys are doing well. What's going on to everyone on TikTok as well, because we are live on TikTok. So, hope you guys are doing well. All right, today's July 3rd. Tomorrow is July 4th, so it is a holiday. Currently, the markets are closed right now. I did not trade this morning. My team did not trade this morning either. However, we are going to go over a couple of index trades that my team and I took last week. My name is Mac. I've been trading the index market for over 2.5 years, and I've been trading the financial markets for almost 5 years now. I'm currently a 100% an index trader. All right, so as you guys can see, US30, we are currently still in this position, and I'm going to be breaking this position down for you all, showing you guys, how you can get started investing into, these types of markets, things like that. All right, so let's go ahead and get right into the move. Here, let's go back here. There we go. Perfect. All right, so give me 1 second, TikTok. Let's make sure YouTube live is working properly. Perfect. Okay, so as you guys can see, right, we are currently still in this US30 position. My target is based on the daily time frame, right? So my target is based up here within this region on the daily time frame. Let me go ahead and show you guys. So my target is based off of this swing high here, right? Now, those of you all who joined us last week, right? If you joined us last week on our lives, I told everyone on TikTok live, and we were live on YouTube as well. I told you guys that we were going to be looking for buy positions on US30, right? We took a couple of buy positions here, right? Price push to the upside. We hit our target on our first couple of buy positions. And then now we are going to hold this buy position here until we hit external liquidity, which is resting up here at this daily swing high on US30, right? At 34,588.40. So this is where we're going to be targeting on US30, and that's going to lead to about a 14.43% trade, right? So those of you all who are trying to become funded traders, those of you all who want consistent returns, from these markets, right? Trade with Mac Trading Academy. All right, and I know we're going to have some individuals ask about the link. So if you go to Google and you type in Mac Trading Academy, we're literally the first website to pop up. All right, the first, click it. It'll take you here. All right, and this is where you can join the mentorship program if you would like to learn how to trade the index markets, right? Now, if you guys do have any questions, feel free to drop them down below as we continue on this live. So this is going to be my target for US30, okay? Looking for about 14.43% return on this trade here. Now, as you guys can see, the time frames have changed just a little bit. The only time frames that I have up here, daily, M15, M5, M2, and M1, right? When it comes to day trading the index markets, okay, you really don't need the hourly time frame. You don't need the H4, okay? You don't need the H2. You don't even need the M2, right? As long as you're able to look at the daily time frame, the M15 and the M5 or the M1, then you're good to go as it relates to day trading index pairs, right? Very straightforward. So last week we had a fantastic week trading US30, right? A very, very good week last week trading US30. Now, US30 did not provide the most return, however, right? We day traded US30 every single day last week. However, right, we were also trading the S&P market and the NASDAQ market. And believe it or not, the NASDAQ market actually provided the most amount of return last week, right? So last week, the first trade that we took last week on US30, okay, was right here. We have a 5.18% return trade. All right. Give me 1 second, guys. Let's see. Okay. So we have a 5.18% return here. Okay. Then on Tuesday, right, we had a 2.3% return, right? On Wednesday, we took 2 trades. We have 1 trade here that was called out live on TikTok for plus 2%. We had another US30 trade here for 3.79%, okay? Hold on, let's go through let's go through those numbers again. I think I messed up the calculation. So 5.18%. Okay, I'm trying to calculate this live for you guys. All right, then we have a 2.3%. Okay, then we have a 2%, so plus 2%. All right, then here we have a 3.79%. Okay, and then this trade here, okay, we haven't hit our full target yet, but we're looking for about 14.43%. Now, this is a trade from last Friday. Okay, if we would have closed last Friday, right, we would have been looking for about, where was price? Friday. Oh, excuse me. Here we go. Perfect. So if we would have closed on around Friday's closing, that would have been an 8.8% trade, right? So without this trade, because right now it is unrealized gains because we haven't closed the trade just yet. So last week, the returns on US30 so far, 13.27% return on investment. Every single trade that we take within the market when we're day trading, right, we are only risking 1% equity. All right, no more than 1% equity is risk when we are taking these trades within the market. All right, so keep that in mind. Very, very simple strategy. Okay, very, very simple strategy that's taught here at Mac Trading Academy. If you join the mentorship program, what you'll gain access to, okay, if you join the mentorship here, you'll gain access to my index trading course, which is right here. All right, that index trading course is $289. However, the mentorship program is just $99 per month. All right, not only do you trade live with me, but you're also able to review the course as many times as you want. And if you want to trade currency, you definitely can as well. I don't trade currency anymore. And later on this week, I will be posting a link, okay, on the website for you guys to sign up if you want to do a free webinar with me. And you guys can come and ask any questions and kind of see how we do this. So 13% return on investment with the US30 market. Let's go over the S&P market before we actually break down any trades, and I'll let you guys choose the first trade that you would like to go over. All right, so let's go over the S&P market. Let's talk about these trades here, what's going on, and what was the return like. All right, so we have to go to Tuesday and turn on. Oh no, we just took a sell on Tuesday actually. That's fine. You guys may see my screen lag just a little bit. It's because we're on YouTube Live as well as TikTok Live. And I'm also recording it, so. Anyways, Tuesday, let's go to Monday. Perfect. Okay, now Monday we took 2 positions, and we're missing 1. So we're gonna have to do this here. All right, we're gonna have to go to the M2 time frame, and we're going to have to turn on this position. Okay, it's not here. So we're just gonna put it up here. I must have accidentally deleted it. It's all good though. Boom. And boom. And then we'll turn this on the M15 so we can see it. Perfect. All right, so let's go to the M15 time frame and let's talk about last week as relates to the S&P market. Now, as relates to the S&P market, you can either trade SPX500 contracts on a leveraged account, or you can trade US500 on a leveraged account. It's completely up to you. Or you can trade futures. Okay, it's completely up to you how you would like to trade it. Or you can trade stock options with SPY. So there's many ways to actually trade the S&P market and take advantage of these moves. But no matter what you're trading, okay, the strategy that we use here at Mac Trading Academy, you will be able to do so and thrive within those markets. All right, so let's go over the first trade of last week within the S&P. Okay, let's talk about the return. And we did lose some trades as well on the S&P last week, so stay tuned and we'll go over some losses. So this was a 4.13% return. Pretty decent trade. All right, we also took another trade during the PM session for 4.2% return. All right, so that's 8.33%. We also took this trade here, all right, for 3.5% return. All right. I took this trade here. I didn't call it out or anything, but I took this trade here on Wednesday, and it was a -1%. All right. Then we looked for sells here, and I saw the buys set up, and I was supposed to take buys because my daily bias was bullish. However, I didn't take it at first. All right, I was looking for a sell, so that was another -1%. And usually my rule is if I lose 2 trades in a row, I'm done trading for the session. But I ended up taking this trade here, all right, for 2.8%. So it made up for the 2 losses, and it still provided me with 0.8% positive return. So I'm not complaining too much about taking the next trade. But usually we don't take 3 trades within a day trading session or day. And then we have this trade here. Now, I should have left this position open. I left the US30 position open, which was pretty much the same position. Very, very similar confluences. But for some reason, I did not leave this trade open here. So we're missing out on all of this return. But it's all good, right? Follow the trading rules. It was a successful trade at 3.32% return, right? Which put us at 15.93% plus the 13% from US30, 28.95%. Not bad at all. So 28% off of US30 and SPX combined. The last asset that we're going to look at as it relates to return before we start to get into some of these trades, some of these trade breakdowns, is going to be the NASDAQ. All right, so we're going to scroll to the beginning of the week, and we're going to look at what type of returns did NASDAQ provide my team and I with last week. All right, so Monday we were here. All right, so Monday I was looking for price to run into these lows here. All right, we started out -1%, right? Last week on Monday, we took a loss here. We were looking for 3.84% return on investment. However, as you guys can see, price barely missed the target here. All right, we consolidated just a little bit, and then we started to move to the upside. As it relates to taking losses within the index market, that is why we manage our risk. We only risk 1% of our equity or less per trade that we take. This allows us to maintain profitability and consistency after applying our strategy over a series of trades, right? That's why we do it. That's why we manage risk. So our second trade last week, okay, we were able to make 6.74%. All All right, now this was called out on TikTok. If you do not join in on the TikTok lives, okay, every day between the hours of 12 p.m. and 1 p.m. Eastern Standard Time, what are you doing? All right, because this was literally a day where I told you guys we were looking to come off of the daily high, and I told you guys look for short positions after buy-side liquidity sweeps. That's exactly what took place. So it hit our first target right here, all right, based on sell side for 6.74%. All right, so Tuesday we were resting around 5.74% within the markets. All right, now Wednesday, okay, so Wednesday we took another loss. All right, we were looking for 6.89% return. We came very, very close and we took a loss. Okay, so on Wednesday we were resting around 4.74% within the NASDAQ markets. So Thursday was a phenomenal day. Okay, price hit our full take profit. Finally, fulfilled our analysis from the day before, which was here. Okay, for about 13.24%. Very, very solid. Very, very solid. So on Thursday, we were sitting around 17.98% within the NASDAQ markets, right? So that was Thursday. And then Friday, we did not take a trade, all right? And then I did not allow a runner for the NASDAQ because the NASDAQ can be kind of volatile sometimes. A lot of people think US30 is the most volatile market. I don't think so, right? SNP500 is definitely the least volatile out of all of them, right? But the NASDAQ market is definitely the most, in my opinion. As you guys can see, like, even here, right? We came very, very close to hitting our take profit, which was, resting at buy-side liquidity, and price decided to instigate more buy-side liquidity and just push to the downside, right? Another example here, right? Same thing. Consolidation, and then we just have aggressive move to the upside, right? If you look at within every single session last week, okay, within New York session, the NASDAQ pretty much had a volatile push. Here, big volatile push, right, during the AM session of New York. Here, very, very volatile push throughout the entire AM and PM session of New York. Here, volatile move to the upside, right, during the AM session of New York, right? Thursday, we didn't really have much movement within session, but after session, we did. We had a lot of volatility, right? And that's just something you don't see with US30 and S&P as much, right? More so with US30 than the S&P, all right? But in my opinion, NASDAQ, that's where you really see those pushes. So we didn't leave a runner. We took everything off the table. So NASDAQ, SPX, and US30, okay, combined, okay, produced about 46.93% return on investment last week. All right, 46.93% return. If you have a $100,000 funded account here at Mac Trading Academy, okay, with our $99 mentorship program, that would have produced you about $46,000, which is absolutely crazy. I mean, you're not trading your money anyways, right? So you wouldn't be able to withdraw the entire $46,000, but you do get 90% of that, 90% of $46,000, right? Just implementing our very, very simple index trading strategy. All right, it's very, very simple how we produce these results. Now let's get into a few examples of how we actually produce these results, right? Let's get into a couple of actual trades. Like, for example, you guys may be wondering, Mac, why did you take that 13% return on investment NASDAQ trade, right? So let's go ahead and start breaking down some of these moves so you guys can kind of understand, why my team and I trade the way we do and why we take these positions within the market, right? And yes, you will have losses, right? You will have losses, which is why we manage our risk, right? So we don't risk more than 1% of our trading account. No matter what's going on, no matter, how strong our information is, we never go above 1% risk. Does that make sense to everybody? Right? You always want to stay below that 1% risk mark. Now, if you choose to go above 1% risk, That's completely up to you, right? You definitely have the ability to do that. But my team and I, we only recommend risking 1% of your account per trade that you take, right? And because we're day trading these assets, because we're day trading the NASDAQ markets, because we're day trading the S&P markets, because we're day trading the US 30 markets, right? We don't have to be in these positions long. Right? So let's go ahead and get into this NASDAQ breakdown for you guys. Let's see. All right, let's get into this NASDAQ breakdown for you guys. Starting with our trade on Thursday. All right, and this is why we always take the next trade. All right, and another thing about the index strategy, all right, you're only going to be trading the markets or looking at the markets for 5 hours. That's it, right? You're not going to be spending all day and random hours, right? Every single day, you're only looking at the markets and paying attention to the M15 charts from 9:30 a.m., okay, to a certain time. Then there's an overlap. All right, and then you'll be paying attention to the markets for a few hours in the afternoon as well. That's it. But you don't have to be on the charts before 9:30 a.m. Eastern Standard Time, right? It gives you plenty of time to wake up, go to the gym, grab your coffee, make yourself some breakfast, right? Get your agenda ready for the day. And then by 9:30, you're on the charts. That's how my life is literally every day at this point. 8 a.m. meeting with the team. Meeting's over before 9. 9:30 come. We're on the charts. We're getting ready to take our positions. And then we just handle other assignments outside of trading, right? In the in-between time. But when the alert goes off, when our liquidity alerts go off, when our volume alerts go off, we're back on the charts and we're looking for positions. Now, last week I didn't have a lot of meetings, right? So we were able to actually day trade every single day, which is why you guys saw the crazy return on my Instagram stories. But weeks where I do have like client meetings in the mornings and things like that with investors, on those days I'm not necessarily able to day trade every single day, AM and PM session. So I'll usually either choose the AM session if my meetings are in the afternoon, or I'll choose the PM session if most of my meetings are in the morning, and then my team will just trade the rest. So so last week, what you guys saw was just my return on investment on my Instagram story. It was just my return on investment as it relates to my contribution to the assets that we have under management, right? But I do have individuals where every single day, all they do is trade. We have about 3 individuals that we've allocated capital to, and they trade the index markets every single day, right? So let's go ahead and start breaking down some of these moves. So first we have to start on the daily time frame. Okay, you guys have to understand daily bias. All right, if you don't understand daily bias, you need to understand daily bias. All right, that's going to be first and foremost. Now, we are looking for the NASDAQ to run into these highs here. Okay. However, just because of how volatile the NASDAQ market is, I personally did not want to hold that trade. And 13% return on investment is fantastic, right? Like, I'm not complaining about 13% return, right? So as we can see here, we have a swing low. All right, we have a swing low here. It was confirmed with this bullish candle. Wednesday, I told you guys to take buys. And as you guys can see, we have a bullish candle that printed on Wednesday, right? Thursday, we had an inside bar, which was simply just to set up for buy positions on Friday. right? And that's when our take profit was hit from our Thursday's position that we're breaking down. So why are we looking for buy entries on Thursday? The reason why we're looking for buy entries on Thursday is because we have a controlling swing low that was confirmed here. Controlling swing low, and it was confirmed with this candle here. Because of that, our daily bias is bullish, right? We're looking for buys. Now, all of this is broken down in major detail, okay, within the index trading course here at Mac Trading Academy, all right? But we're just gonna go over it very quickly for you all right? So you have to understand the daily bias. If you do not understand your daily bias, more than likely you're going to be taking low probability trades, okay, based on what you think you see, and you're gonna be losing money on a daily basis. You have to understand daily bias and you have to respect it. That's how I took 2 losses on the S&P last week. Rookie move, right? Completely rookie move on my end, right? I was going to sell into the buy, but it was a low probability trade. It went against the daily bias and I took a 2% loss because of it, right? Still made up for it on the next trade, right? But to everyone on TikTok, I told you guys, look for buys, right? And then we went over the reasoning. So we're going to be going over entry that took place on this day here. Okay, that was Thursday. All right, but the volume did not come into the market until Friday. Okay, we didn't take an entry on Friday for the continuation. All right, but it could have been done as well. And then we'll go over US30 as well. I see some people asking about US30. We'll go over US30 as well. All right. So once you have your daily bias intact, all right, this is the entire process that my team and I use in order to take these trades. Okay. Once you have your daily bias intact and you understand, all right, we also do look at the weekly time frame. The weekly time frame is important to look at. If you guys want me to go ahead and like give you guys the full markup, I can. Right. So we have a little bit of imbalance here that price decided to trade back into. I don't really care about that, to be honest with you, all right, based on how I day trade. However, it is good to understand. Now, this is what I'm going over is everything that I see in my head as it relates to the market, right? Like this is what I see in my head, and this is what the index course will have you seeing as well, right? So let's just move this to the back. There we go. So we have a little bit of imbalance here from price taking out this swing high, okay, with the newfound controlling swing low. All right, price is returning to this imbalance here. All right, we could easily break this down to the H1 time frame and look for a change of momentum within that area after price taps into that inefficient pricing. So let me show you guys that. All right, so we can see that we swept liquidity here, which you guys can see my H1 time frame is already marked up. All right, but this was actually the M15 liquidity that I was looking at. All right, we had a little bit of accumulation within this area here. A tiny bit of accumulation, not much, but it is still here, so we still have to pay attention to it. Oops, wrong tool. Right, so a tiny bit of accumulation. We had a little breakout here outside of the accumulation, as well as breaking the controlling swing high on the H1 time frame, and then price starts moving to the upside, right? So Tuesday, all right, if we go to the M15 time frame, Tuesday, so this was Monday, right? I wanted to see price push a little deeper into this area to hit our take profit. All right, price moved to the upside. And Tuesday was why we were looking for buys here, right? We were looking for buy positions here. Our buy positions weren't fulfilled. All right, so we saw price was bullish, and what did we do? We just sold the daily high. Since we couldn't get into the market for the buys and we missed out on that opportunity, we just sold the daily high, right? So trading low key is just a common sense type of thing as well, right? Like, trading is very, very simple, and don't let these guys, you know, and gurus make it seem complicated. It's a very, very simple concept. Okay, you just have to be disciplined enough to follow the concept. But it's very, very straightforward. Right? Very, very straightforward. The reason why I'm moving the chart around so much is because I'm trying to have, I don't want the candlesticks to overlap with this here, because it messes up with my, I don't know, it just looks ugly. But I also want you guys to be able to see, you know, what asset we're looking at. So anyways, because we're also live on TikTok as well. All right, so let's get into, now that we understand the daily bias, right, and why we were looking for buys here. All right, we did the entire markup. We showed the transition from substructure to minor structure, and now we're expecting price to continue to extend into external structure here. External major structure here. I'm at least looking for price to sweep this. I mean, after we at least trade above this price, I really don't care what happens, because if price wants to change directions, we'll just take advantage of the daily bias change. But I am looking for price to at least run into 15280.1. Right? So this high here, this daily high from Friday, June 16th. 15,280.9. Right? So now let's go ahead and go to the M15 time frame and break down. Okay, now that we understand why we were looking for buy positions on Thursday, okay, even though, you know, volume within the market did not come until Friday, and technically speaking, Friday was still Thursday, but you guys know Friday candle starts 1800 hours on Friday, or excuse me, on Thursday. So, you know, that's just how the market works. But anyways, so it was technically still Thursday, but it was the new Friday candle printing. All right. We had a sell side sweep of liquidity here. All right. Now we were looking for sell side sweeps of liquidity. Okay, the entire session. We did have one here during the AM session. Okay, but no entry was given, and we're gonna break this down to the lower time frame and talk about all of this. All right, so no entry was given to my liking within this area here. We had a huge inefficient pricing that was offered. We could have taken this on the M15, technically speaking, since we did take out this swing high, okay, after sweeping this swing low. However, all right, I did not like the risk to reward on a trade like that, right? I never really take my entries on the M15. I do know traders, a part of Mac Trading Academy, who do. However, you know, it just doesn't compare. This trade would have produced you 5.43%. My trade produced 13.24%. So it just doesn't compare. I like to take my entries on a micro time frame, all right, after I have multiple forms of confluence. All right, does that make sense to everybody? Let me see if we have any questions. Let me know if that makes sense or if it doesn't. How do I join the TikTok live sessions? You can join the TikTok live sessions by subscribing to, follow me on TikTok at Mac the Trader. All right, and essentially what that's going to do is it's going to notify you whenever I go live on TikTok. And remember, it's between the hours of 12 p.m. Eastern Standard Time and 1 p.m. during the week, right? Because that's the overlap of the AM and PM session. We go live, and I break down whatever trade that I'm currently in, and then I talk about exactly what I'm looking forward to as it relates to the PM trading session, which starts at 1 p.m. Does that make sense to everybody? So, we were looking for buy positions. We had a sell side sweep of liquidity here, and that is when we went to our entry time frames. So I believe this trade was taken on the M2 time frame. my apologies. It was taken on the M5. M5 time frame is probably my favorite entry time frame. Actually, no, it definitely is. M5 entries are so clean. They look good. I mean, they're just super straightforward. So we took this trade on the M5 time frame. We're gonna blow this up for you guys on TikTok so you all can see, and on YouTube as well. All right, so this was our M15 sweep of liquidity. Now remember, this is all coming from the higher time frame, right? Our daily bias is bullish. Our PM session has now started. We've swept sell side liquidity, and we're looking for a micro reaction to that sell side liquidity sweep. We're looking to see if price is going to become inefficient at the reaction of the higher time frame sweep of liquidity in confluence with our daily bias, right? Very simple, very, very simple, trust me. So here we have a shift in momentum, okay? A little bit of accumulation, momentum shifts within the market. Pricing is inefficient within this area, all right? Price comes back to the inefficient pricing that was offered. This is where we took our entry. Our stop loss was right below this swing low here on the M5 time frame, okay? If you are not an experienced trader and you are new to this trading style, okay, I would just say cover the low. There are plenty of times on the M1 and the M2 time frame where I simply just cover the low. Very straightforward way to do so, right? You don't necessarily have to, you know, have the smallest stop loss. You're risking 1% anyway, right? Your job is to not think about the return, it's to manage the risk. So, I mean, even if you would have placed your stop loss below this swing low here, right? That's completely fine. That's completely fine, right? So let's talk about our target, all right? Why is our target where it's at? All right, so we chose to target this region right up here, all right? Around 13% return on investment, 13.24% return on investment. All right, and it was simply based on measuring the manipulated range. Now that is something that we have talked about, okay, on TikTok and on YouTube, all right? But my team has been slightly upset about me discussing the manipulated range publicly, right? So we're not necessarily gonna break down exactly why this was the manipulated range that was used, but essentially I just used standard deviations of the manipulated range in order to calculate these returns and targets. All right, very, very straightforward. It's so simple how we trade here at Mac Trading Academy. Very, very simple. All right, but last week was really good within the NASDAQ markets. All right, so someone DM'd me and asked if we can go over S&P. We can go over the S&P market, absolutely. So last week within the S&P market, our return was 81%, 82%, something like that. Very, very solid week within the S&P market, okay? I wish we would have left this runner like we did on US30. I am seeing some requests to go over US30. We will go over US30 in just a second. We missed out on an extra 10% within the S&P market because we did not hold this trade here. So as you guys saw, NASDAQ completely ran, right? But we closed the S&P position, all right, during the AM session once it hit our target. But as you guys saw with the NASDAQ market, right, if we wait for the chart to load, right, we did not get the buy position here. We did not get the buy position during the AM session. It formulated during the PM session here, right? However, with S&P, we did get it during the AM session, which was here. Right, as you guys can see. So let's go ahead and break this down. Right, of course, starting with the daily time frame, you guys know we have to start with the dailies. So if we go to the daily time frame, all right, wait for the chart to load up. So if we go to the dailies, all right, what we can see is we have a controlling swing low here, okay, where you guys see this orange dot, all right, that was confirmed with Tuesday's candle closure. Okay, that's why I told you guys on Wednesday, look for buys. All right, Thursday, we're still looking for buys. Friday, we're still looking for buys. Now, if this candle here, even if it closes bullish, doesn't matter. If this remains an inside bar, we may be looking for sells on Wednesday because tomorrow the market will still be closed. Right? Because it's July 4th, holidays. If you are watching on TikTok, feel free to drop likes. It's greatly appreciated. And if you are watching on YouTube, a thumbs up would also be greatly appreciated as I break down these trades for you guys. Right, so we're looking for buys. Now, S&P, the A to B move has already been fulfilled. However, on US30, it hasn't been fulfilled just yet, which is why I still have a trade pending for 14%. That hasn't quite hit yet. All right, but if you add that to our return for last week, I mean, that's going to put us, realized profits from trades taken last week. That'll put us around, 60% return on investment, which is crazy. Not really. I mean, we've been doing numbers for quite some time, but it's still kind of crazy. Every time it happens, it makes you like you ask yourself, like, is this real? Because do you guys understand what these types of numbers mean with 8 figures assets under management, 9 figures assets under management? I know a trader here in Florida. As you guys know, I moved to Florida. There's a trader in Miami, right? 100 million assets under management from funding companies, right? Now, I plan on doing this, of course, with my own funds, right? I'm not a funded trader or anything. All the capital that I invest within the market is my own capital. But utilizing outside investors once you have the skill set is it's phenomenal upside. Once you truly have the skill set, it's phenomenal upside, right? So make sure you guys invest into the skill set. Make sure you guys are investing your time into the charts, right? And also keep in mind, the apprentice phase for anything in life is 5 to 10 years. You have to understand that, right? I don't know. Okay, there is a book called Mastery by Robert Greene. If you haven't read it, please go check it out. It's a phenomenal book. It'll change your perspective on everything that you are applying your energies towards, right? The apprentice phase for learning any skill set is 5 to 10 years. You should not be expecting any type of return on investment until you have finished the apprentice phase of learning how to trade and invest money. 5 to 10 years, right? This is why information is so important, because information is going to either increase that number of 5 to 10 years or decrease that number. This is why having a mentor is so important when it comes to trading, because a mentor is going to decrease that 10-year number to 5 years easily, right? And then depending on how much time you put in, you could honestly finish the first phase of the apprenticeship within your first 3 years, right? But while you are within the apprentice phase of learning how to invest and learning how to trade, you can be making money, right? All you have to do, check out Back Trading Academy and let us show you exactly how to do so, right? Now let's go ahead and get down into the lower time frames on SNP500. So we've already completed the A to B move, as you guys can see, all right? But that doesn't mean we can't still trade it, all right? Now, this was on Thursday. We're going to be going over Thursday's trade. So controlling swing low here, confirmed with Tuesday's candlestick closure. right? We're looking for bullish moves on the day trading time frame up until that changes. All right, so let's go to the M15. Now this is what we were looking to take place on the within the NASDAQ market, right? But as you guys saw, there was no entry that actually formulated within the NASDAQ market during the AM session on Thursday. So the asset of choice that we traded on Thursday was SPX. All right. Now we have a trader that has allocation of funds that trades US30. We have a trader with a certain amount of allocated funds that trades S&P, and we have another trader here at Mac Trading Academy allocated with a certain amount of funds that trades the NASDAQ 100. All right. I trade all three of them. All right. I trade SPX, US30, and NASDAQ. If you want to see my trades, okay, if you want to see like screenshots of my trades and things like that, like TikTok is seeing now, all right, we switched over to a different screen, but YouTube, you guys may not be able to see it. Follow me on Instagram at Trillionaire Mac. All right, follow me on Instagram. It's going to be the easiest way to see my daily trade uploads. Trillionaire Mac on IG. All right, this is a screenshot that was taken. Here, let's switch over. Okay, solid. Right, let's switch over YouTube as well. So as you guys can see on YouTube now, right, if you guys do want to see these screenshots, this is the current US30 position that I am in right now. I took this screenshot today, okay, literally at like 2:23. All right, so we'll go over US30 in just a second, and you guys will be able to see that. Anyways, if you guys do want to see my daily like trades that I'm actually taking, right, within US30 markets, within the S&P markets, within the NASDAQ markets, feel free to follow me on Instagram at Trillionaire Mac. Let me know that you're from TikTok or you're from YouTube, okay, and I will give you a follow back, and I'll shout you out. All right, DM me on Instagram, let me know. So let's go back to the charts. All right, so this is that sell side sweep of liquidity here. All right, now we're going to go to the lower time frame, and we're going to see how price reacted to that. All right, M2 time frame, I believe, is the time frame where we took this trade. We took the buy on NASDAQ on the M5. I believe it was the M2 for S&P. Oops. Hold on, let's slow it down. All right, it was the M1 actually. Okay, it was the M1. So what we're gonna do is we're actually going to use the replay so we don't have to keep scrolling back in time. Let's go to the M1. Solid. All right, so I actually took this trade on my server on MT5. So I trade on MT5 as well as Trade08. So if I'm ever trading on TradingView, all right, I just connect my Trade08 account. But because it has different rules for leveraged accounts and risk allocation, I don't always trade on Trade08. However, my team does. They only take trades on Trade08. It's easier for us to manage their risk like that. So I took this on MT5. All right, S&P contracts, SPX contracts, excuse me. And there was actually volume imbalance as well as inefficient pricing. So here we can only see the inefficient pricing on this chart, all right? But on my MT5 chart, there was actually volume imbalance as well. So we can see a shift in momentum with this nice push to the upside after we have that sell side sweep of liquidity. This entire pattern here is beautiful, right? This entire pattern right here is absolutely beautiful. Now, this entire move was confirmed once price continued to push to the upside and took out this high here. All right, this controlling high on the M1. Stop loss was just below this swing low here. All right, we had a little bit of drawdown, just a little bit, all right, with this wick here, all right, on the M1 time frame, and then the rest was history. We had a nice bullish candle as the first M15 candle out of the entry. All right, and then target was hit. My target was hit here, which is why you guys see, here, let's make this a little larger for TikTok. All right, cool. So my entry was actually hit here, which is why you guys see that this is extended out. So I actually came back to entry here, which could have been a re-entry for a secondary buy position, which we're actually going to go over now. But on 8cap server, it looks like target was hit here, right, at this swing high. However, on my MT5 server, my target was hit here around 1600 hours on Thursday. All right, now let's go over this buy position here. Now this is the same buy position that we took on the S&P, or excuse me, NASDAQ, all right? However, we did not take it within the S&P because I was still in this first position here, and I did not want to allocate another 1% risk within this market. All right, so let's go ahead and break this down to the M5 time frame first, since that's the time frame where we took the buy position on the S&P. So let's scroll back just a little bit to last Thursday. Am I doing anything for the 4th? Spending time with family. We're grilling out, you know, the usual. Oops. Sorry about all the glitchiness, guys. We're live on 2 different platforms, and we are also recording. So my CPU is, it's definitely being used right now. It's all good though. So this is our sell side sweep of liquidity here. What do I trade off of? I trade on, like, if you're asking for my rig, I use, I have an iMac. But if you're asking for my broker, I trade off of Trade-of-8. All right, so we had a beautiful M5 entry right here. And I want you guys to notice how this pattern here looks the exact same as the M1 pattern that we just looked at here. All right, I want you guys to notice that. Now, I'm not gonna go and break it down to you because I'll just end up saying way too much. And my mentorship students are gonna be like, Mac, you dropped so much information publicly, man. And my team's gonna be like, you gotta stop doing that. But I want you guys to do it yourself, right? This M5 pattern here, okay, that you guys see on the M5 time frame right here is the exact same M1 pattern that we saw here, okay? Now, we can't necessarily get into how to know what time frames to actually use, all right? But all that information is literally broken down within my index trading course, all right? MacTradingAcademy.com. All you have to do is go to Google and type in Mac Trading Academy. We're literally the first to pop up because we have excellent reviews and we have a healthy website and we have a lot of activity on our website from all of our students. So Google literally has us at #1. Shout out to my team for making all of that happen. Anyways, M5 entry here, same M5 entry that we just went over on the NASDAQ buy position as well, right? It matches to the T. All right, so this should have been the entry within the S&P market. Like I said, I did not take this trade, right? Because first I was still in this position here. I did not want to be, you know, I did not want to be sitting at 2% risk, any more than 1% risk on S&P market, right? So let's go to the M15. Let's talk about our target. All right, we're gonna set the same target that we set for NASDAQ. All right, we're gonna go about it the same exact way. All right, however, it does look slightly different, but it's okay. Right, so we did miss out on a 12.11% position on the on the SPX 500, but it's all good, right? It's all good. We don't cry over spilled milk, right? We were still able to profit 3.32%. I'll take it. 2.8%, 3.5%. Monday was great. Last Monday was fantastic. Over 8% return. 4.13% there, 4.2% there. Wednesday was pretty much a break-even day for me personally, right? We have a 2.8% trade here, but that just made up for these two minus 1% losses here, right? I went against my daily bias and I paid the price for it, right? So Wednesday was pretty much a flat day. We only had 0.8% return on investment, but every other day last week was pretty good. I was going to sell the daily highs within the SPX market, but the position just didn't formulate. It just didn't form. There was no reason to enter the market. And honestly, sitting at 46% return on last week, I was pretty happy with the profit. I'm gonna be honest. Right? But if we go to the lower time frame, yeah, no entry formulated within this area. So there was no reason for us to take the trades. Hey bro, great content. What did you do to help out with your psychology? Any advice on that? Great question for sure. I hope you're still on the live. I'm just now seeing the YouTube question. So what did I do to help out with my psychology? Really, it's going to be the strategy, man. Like, you have to understand that you're not making any decisions within the market. If you utilize a strategy, right, and you don't have the confidence to actually take those trades, it's because you don't quite understand your job within investing, right? Your job within investing is simply just to implement a strategy. That is it. Your job in investing is to look at 1 + 1 and say, okay, it equals 2. Your job in investing is to look at 2 + 2 and say, okay, that equals 4. Your job is to do the things that the strategy cannot do, which is to do what? Manage risk and press the buy and sell button. If you understand your job to the fullest extent, okay, then there is no psychology problem, right? Now, if once you understand that, then you have to ask yourself, is the strategy I'm using making me money? Is it profitable? Right? And sometimes the strategy is profitable, but sometimes the strategy just does not mesh well with you, right? Like, for example, moving average crossovers, MACD crossovers, all of that with indicators, it just doesn't mesh well with me, right? I like to look at naked charts and raw price action and candlestick patterns, right? I like to understand liquidity, supply and demand, inefficiency, and imbalances, right? That's what meshes well with me and how I view the market. You have to ask yourself, is the strategy that you are trying to implement actually working within the market? And does it mesh well with you? I'm not saying, a strategy that looks like it works with, when someone else uses it, but then when you use it, it doesn't work. No. I'm saying my students use this strategy here that you guys are seeing, right? That you guys are seeing us go over. My students use this on a daily basis and they produce results. I have screenshots that I receive, DMs that I receive every single day, right? Once you ask yourself those questions, then psychology becomes easy, okay? Some books that can assist you, trading in, these are pretty basic. I'm pretty sure everyone has read them and heard of them, but Trading in the Zone is one of them, all right? It's a pretty decent book that will assist you as it relates to your psychology. And Trading in the Zone really kind of teaches you that your only job is to implement a strategy. Your only job is to take the next trade. That's it. Literally. That is your only job, to take the next trade. If you're doing anything more than that, you're going to be suffering, right? Now, these are the sell positions that we took on US30 2 weeks ago, very, very solid sell positions. All of these trades are not full 100% volume, all right? So our runners hit 17%, all right, but that was such a small volume, so it wasn't 100% volume on these, but it was a pretty solid week last week, or 2 weeks ago, excuse me. Last week was good as well, especially on US30 and the NASDAQ. So this is the current position that we're in. All right, but does that make sense? And ask me questions if it doesn't make sense, what we just talked about. What did you do to help with your psychology? Also, I journal, right? Make sure you're journaling, right? Like every single trade you take, journal, okay? There's also a saying that I wrote out countless times. It's actually in one of my trading journals, where I can show you guys on the next live if you would like. But this is literally what I wrote out every single day. So write out this sentence. Write this out every single day. Literally. Right? It may sound, too good to be true, but just write it out every single day. I am an excellent and profitable trader. I have ultimate faith and desire in my trading ability. Write this out every single day. I have pages and pages within my journal of that being written out, right? Because what that's going to do is it's going to bypass you feeling motivated. It's going to bypass the whole motivation thing, right? No matter if you feel motivated or not, right? By you writing this out on a daily basis, you're going to be disciplined enough to wake up, study the charts, go over the trades, take the positions. Why? Because you have ultimate faith and desire in your trading ability. Why do you have ultimate faith and desire? Because you are an excellent and profitable trader. Right? So this is something that I tell my students, and it works wonders. Does that make sense, guys? Do we have any more questions? All right. So we'll be back on YouTube Live as well as TikTok Live at 8 p.m. Eastern Standard Time. All right. My students will be on the call, so they'll be asking questions. So there will be periods of time where I'll go on mute, to answer their questions and things like that. But feel free to join in 8 p.m. Eastern Standard Time. I'll see you guys there, and peace out.